Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back here with the halftime report. We understand that Bajaj Auto's numbers are just about to hit the exchanges, so we're just waiting by for that. Okay, net profit number has come in at 1115. So that is actually just about pretty much in line. Actually, our own poll had thrown up a number of 1170 odd crores. So I think it's actually 1237. If that's the number, then it's a little bit below our own poll. So about 100 odd crores below. Nigel, any more details that you have?
Yeah, we're just waiting by for that. So, that number is a little bit lower. We're just waiting by for the top line as well to come out. Remember, we're looking at a number in terms of a top line growth of around 44%. It's coming in there. We have got it at around 7,400 crores. Now, that compares with our poll of around 7,845 crores. But I'd like to see that number on a like-to-like basis and see whether or not, in case there is some sort of regrouping, we're looking at a growth of around 44%. Prima facie, these numbers appear that they've missed our estimates. Even the EBITDA number, it's coming at closer towards 1,300 crores. Sonia's poll threw up a number of more than 1,500 crores or so. These numbers look a little bit disappointing at the first look, and that explains why the stock has moved to the low point of the day. Sonia's with us as well in the studio. The broad numbers that we're looking at is a 44% growth on the top line. In terms of margins, we're looking at around 19.3%. The calculated margin that our ticker team is throwing up is around 17.3%. These numbers are not going to be taken very, very well by the street, and that explains why the stock is lower. The stock is down by close to around 2% as we speak. Sonia's with us. Sonia, your brief understanding of these numbers?
Well, these numbers definitely look below street estimates, Nigel, and I'm just trying to calculate what the realizations are, because it seems like the realizations have been under pressure for the company this time around. This time what they've gone ahead and done is cut prices in some of their entry-level bikes, which is the CT100, etc. And that has put pressure on their realizations. Perhaps that is the reason why their EBITDA number is also below street estimates. 1,281 crores really is below even the most, conservative street estimate as far as the EBITDA is concerned. And we should actually get a trajectory of the margins up for you. 17.3% this time, if it is, compares to 19.4% last quarter and 19.3% the quarter before. So for the last 3 quarters before Q1, the margins have been in this range of 19.4 to 19.7. This time it slipped to 17.3%. So we really need to know, what the company has done in terms of realizations.
But Sonia, I'll just give you one small bit of good news. In the domestic motorcycle segment, the company says that their market share has increased to 16.3%. They've compared it with the Y-on-Y quarter, that's Q1 of FY18, in which it was about 14 odd percent. So 16.3% is their market share. Of course, in the commercial vehicle space, they say that their share stands at almost at 59% mark. So that is looking good. In terms of exports, this quarter, they have seen the highest ever quarterly exports. So far it looks like, at least in terms of market share, it's boding.
Besides disappointing operational performance, the profit number as well, there are a few factors that are playing out there. I'm just looking at the other income. That's lower on a year-on-year basis. It's coming at around 404 crores. That compares with around 455 crores. So that is one of the factors. The effective tax rate this time around is 30.9%. That compares with around 28.2%. So that's the other factor. But that's not taking away from the fact that the operational performance is way below what the street was working with, but these are the couple of other details. Sonia.
Also, I just calculated the realizations, Nigel, and they're looking very disappointing. 60,494 rupees a unit. That compares to 64,000 last quarter, 63,000 the quarter before, and 61,000 rupees per unit in Q2. So these are actually the lowest realizations that Bajaj Auto has seen since Q3 of FY17. We'll try and get that trend up for you as well. for the last 4 consecutive quarters, that is from Q1 to Q4, the realizations were going up. This time, realizations have gotten hit quite a bit. Now, I think there are 2 reasons for that. One is because the product mix has been adverse. They sold more number of lower margin products, which is their CT100s, the entry, the executive level segment. And not just that, in the entry level segment, they did undertake price cuts as well. You know, they were very aggressive with pricing. To push their products, they cut prices of the CT100 by as much as 35,000. That has impacted them this time around. So realizations are much lower, and I think that's something that the street is sort of reacting to at the moment.
Okay, all right. The stocks moved to the low point of the day. Sonia will come back to us with some more details. For the time being, we have Ashwin Patil who joins us, Prakash Diwan, as well as Shah. Ashwin, coming across to you first. What do you make of these numbers? The street clearly doesn't like it. The numbers look very, very disappointing. The stock is down close to 4.5%.
Absolutely disappointing set of numbers. I think this time the company has gone after gaining market share, basically in the entry-level segment where they have won market share by about 200 bips, but they have taken price cuts and adverse product mix has happened in their overall volume pie. Though we have seen a great growth in that particular segment, CT100 and Platina, but we have also, they have done a trade-off between margins and market share this time. And that was not how Bajaj Auto used to function earlier. We have seen, the company taking market share hit, but they have maintained their margins in the range of 19 to 20%. But this time, 17.3% margin is really very disappointing. I was actually earlier looking for some one-offs, but I don't see anything because at the top line itself, the realization has got a hit, and that's the reason why the overall numbers have got impacted. We should only look at about, and this has actually percolated to the bottom line as well. Though we know that lower other income and higher tax rate has led to, a bottom line disappointment, but it's coming from the top itself, where the top line is getting hurt because of realizations, weaker realizations at about 60,000 odd rupees. But this has never been the trend which was observed earlier at Bajaj Auto, and we need to gauge further into it.
Sure, this kind of fall in realizations, I don't think we've seen in a very long time, right, Ashwin? This 60,494 rupees a unit is a 6.5% quarter-on-quarter fall that we're seeing in the realizations. Why do you think this is? I mean, is it purely because of the price cuts that they undertook, or are there some other reasons why the realizations have fallen so much?
I think product mix and price cuts taken at a lower segment where they have gained market share, but they have, they have forgiven their profitability at that level. So I think that's the main reason, because otherwise exports have excelled fantastically this quarter. We have seen one of the best quarters for exports. The overall volumes have gone up. But their contribution from the lower level or the lower rung products like CT100 and Platina has gone up. And they have played a game over there that, they have decreased rather the prices of these vehicles, and they have taken on the likes of Hero Moto, and that's why I think they have given more importance to competition this time.
Okay, all right. Ashwin, stay with us. The stock is now down close to around 5.5%. Prakash Diwan as well joins in. Prakash, what are you making of these numbers? There were a couple of brokerage notes that warned that, from FY 2004 to 2007, at that point of time as well, two-wheeler growth was very good. The demand was good at around 15% odd. But margins declined, and that's what prevented stock prices from moving higher. Do you think, something like that can play out where demand is strong, but they're cutting their prices and pushing for market share, which could in turn, land up in losing market share? Your take on the numbers first.
No, so I think, Nigel, there was never very great expectation from Bajaj Auto for this particular quarter in terms of any, improvement in margins or profitability, because very clearly last quarter was spectacular given the, robust exports to Egypt on the three-wheeler side, two-wheelers to Nigeria. So we were very clear that this was a great quarter. It probably gets difficult to raise the bar. Once you raise the bar, to replicate it quarter on quarter. So the disappointment has been the realization has plummeted significantly. 65,000 odd was the realization last quarter, okay? And now you're talking about just barely 60,000 plus. So it means that it's not an intentional reduction in prices alone, it's probably, difficulty to pass on higher prices in spite of input costs going up. And my sense is Bajaj is now focusing on the rural market share to be bolstered. And they probably feel that that's where they need to kind of, get into quickly before the sales pick up post monsoon, and which is a good season. So I think that's a strategy which was played out. You could see it in the sales numbers month on month. But the numbers probably look optically very disappointing, and the stock had run up a bit in terms of high expectations. So I think it will probably stabilize at this -5% wherever it is today.
Okay.
And from here on, they'll probably be able to move forward with the newer export markets of Philippines, Cambodia, and all of that. So I think it's fine. I mean, the stock had run up, and that's why it's probably realigning to the reality of the realization and profit margins.
Okay, so I just want to also point out that the raw material cost as a percentage of sales has also gone up quite a bit.
Yeah.
So it's actually a double whammy for them. On one hand, they're facing competition because of which they cut prices, and that's hit their realizations. On the other hand, raw material cost pressures have gone up. This quarter, it stands at 71% of sales. It compares to 69.3% in Q4 and 68.3% in Q3. So consistently, of course, it's gone up for the entire industry, but many other companies have the pricing power to sort of pass it on. But Bajaj Auto has gone and cut prices to sort of boost their to penetrate the market further. So Prakash, what do you do? Because this stock has actually, from the end of June, it's seen a significant amount of run up. It's gone from 2,700 to 3,060. It's of course come off a little bit since then, but the peg on which the stock was rallying was the management confidence about pickup in exports and eventual pickup in the domestic market. You think that's something that's not going to play out?
No, I think that will play out. See, because the newer markets that they alluded to in terms of the export growth, and I remember Rajiv Bajaj mentioning, saying if Nigeria does well, we do well. So that was last quarter's commentary. Now with these newer markets that they are focusing on, so it's very clear, sell the high margin, high price products into exports, push the low cost, entry point kind of stuff for the CT100 executive category in the Indian markets, because India is going to be a rural-led growth, not an urban growth. Whereas exports, you have these newer markets where you need to calibrate high-quality products to match the competition. So the strategy seems to be playing out. You'll have to give it 2 quarters. And then by, I think, end December, calendar 2018, you'll start seeing a significant change in the profile. So I'm quite okay with it. If it's come down 5%, it gives people an entry point, again, to ride the new move. But otherwise, I don't see anything which is adverse in these numbers, Sonia.
Okay, so nothing adverse in these numbers. The management does talk about the export business, of course, doing very well. We all know that piece is playing out very well. Realizations for export, because of the rupee weakness, they realized 67.4 rupees in Q1 as against 66.8 rupees in Q1 of FY18 and versus 67.2 rupees last quarter. So, of course, rupee weakness has helped them. The growth has been across both new and matured markets, they say. Volumes in Nigeria have more than doubled, sales to Egypt have more than doubled, and Cambodia, Iraq and Ghana have witnessed a substantial growth. So, no problems with the export business at all. It's really the domestic business where they're getting hit very hard. Atul Shah of Reliance Securities is also with us. Atul, it looks like a complete operational miss. Raw material costs have gone up, realizations have fallen, resulting in 17.3% margins. Your take on the numbers, and what would you do with the stock?
Yes, here we need to notice that overall revenue, average selling price for vehicle has grown up by just 1% as compared to expectation of the 6%. Major key reason behind this is overall contribution of the export has come down from 46% to 44%. That is one reason. And within export, if we observe, Boxer volume is more than double compared to the overall export growth of 31%. So export contribution of the Boxer has gone up, which is always a low margin and low value product. I believe that is the one of the main reason that export profitability impacted by the higher Boxer volume. Of course, on the domestic side also, company took price rationalization for the entry-level motorcycles, which has also dragged this. But going forward, we believe that considering the crude price being higher and exchange is favorable, we believe that margins will be back to normal and we maintain our positive view.
Okay, maintain your positive view. Ashwin, I just want to wrap up with you. Do you expect EPS downgrades post these numbers? Because, you know, the stock is still trading at somewhere around 16.5, 17 times FY20 before the fall that we've seen right now. And the consensus EPS is somewhere around 180 or so. Post these numbers and the disappointment in the margins, would you scale down your estimates?
Not much. I mean, a tad lower than what we were expecting earlier, maybe because in order to adjust for the disappointment that we have seen in the first quarter. But going forward, I think with, robust three-wheeler sales as well as good export performance that the company is doing in the newer markets they have entered, and also on the domestic front, maybe, we will see a quarter or two while this adjustment for their new strategy of focusing more on the lower segment bikes plays off, and they are doing well in the export markets on the higher segment bikes. I mean, not talking about Boxer, but other vehicles are doing well, and currency is also supporting them. So overall, I don't think there will be a great downgrade, but maybe a 1 or 2% here and there it will be there.
So you wouldn't worry about the fact that the company is ready to sort of compromise on margins to push their market share with the kind of price cuts, etc., that they've undertaken?
See, then this about 17-18% margin they have also seen in about 3 to 4 quarters back, and it had got normalized once again. And I think with the support from currency and also the product mix, tilting towards three-wheelers as well as better performance in the newer export markets, I think the domestic woes that they are facing right now, they are also actually, these woes are also supported because of the higher input prices. So going forward with, better product mix expected in the export markets, I think the company will be back to about 18-19% in a quarter or two.
Okay, all right. Thanks so much, gentlemen, for joining in and, in fact, giving us all those analysis. And thanks so much, Sonia, as well, for coming in fact, giving us those details. Well, the stock is down close to around 4.5%. It's seen some kind of stability. It was down close to 5.5%. Remember, it trades at a bit of a discount in comparison to its peers. So that's something that you should keep in mind as well. But these numbers, they're clearly disappointing as we speak. The stock's still struggling, down 4.3%. Odd. One factor could be that commodity prices have cooled down. So in the coming quarter, that's something that could help them since it tracked the metal space. That's something that you could look at as well. Aluminium prices have fallen nearly around 20% from the recent peak. You have steel prices as well that now are correcting as well. So keep an eye out on that factor as well. But how do you trade the Nifty from here? We're holding above that 11,000 odd mark. Is it going to be a good end to this week, or in fact, are the bears going to go into the weekend happier? Ashwini Gujral joins in, as well as Prakash Kaba will be with us shortly. Ashwini, what's your trade on the Nifty from here? Someone's holding a long position. They're getting their 50 points. You tell them to pack their bags and have a good weekend, or do you believe that, in fact, we could be good for more, and that's where you place a stop loss?
See, the issue here is that we are sustaining 11,000. Now, banks have not participated till now. The sense seems to be that possibly HDFC Bank could rally towards the close, and that may take the Bank Nifty higher. So I would still buy at least into the Bank Nifty here and hope that it moves up another 100 points, and that takes the Nifty broadly to the 11,030, 11,050 zone. So that trade remains. Also, several stronger stocks have come back. I mean, today Hindustan Unilever, after that correction, has come back and is now moving higher. So that is a buy with a stop of 1650, target of 1710. United Spirits is a buy with a stop of 560, target of 585. Again, big declines here. And Ajanta Pharma is a buy with a stop of 990, target of 1035. So there's a sense of short covering happening instead of the big mid cap sell off that we see every day. So that short covering could accelerate going into the close.
All right, the European markets have also opened a tad bit on the back foot. President Trump's comments that he was unhappy with the way the Fed had been hiking rates, I think not going down well with investors. Globally, we've seen a bit of a reaction in Asia as well. The IMF has warned that the EU could face an economic impact of about 1.5% if Brexit was to happen abruptly. So all of those are cues that the European investors are monitoring for the moment. Prakash Gaba is also with us. Prakash, good afternoon. Your trade on the index and your stock calls.
Good afternoon to you. Looks like the 10,940 mark is a very important mark to deal with that we saw yesterday. And I feel that very good chance we could see an up move here. And perhaps next week we should be up. Because last week what we saw was a good, massive up move. This week is more of consolidation. So after the consolidation, a fresh expansion should follow and they should be on the upside. So I am still bullish on the upside. Maybe we'll see 11,100 or maybe higher, who knows. Banks have not participated. Looks like banks would participate now because when I look at the internals of banks, some of the banks are looking good. So I have two calls here, both on the one is on the IndusInd Bank, certainly is looking good to me. And IndusInd Bank can climb to around 1940 zones. May take a day or two for that, but looks like 1940 on the IndusInd Bank is on the cards. I would have a stop below 1880 on IndusInd Bank and trade long. That itself should propel the Bank Nifty up. Second is Jubilant Food. I like the stock. Looks good, Jubilant. We've seen a good up move, massive up move today. I think it's heading to levels closer to 1520 zones. I would have a stop below 1470 on Jubilant Food and trade long. See the massive up move. It's a good breakout after a long consolidation.
Okay, all right. Thanks so much for that, Prakash. Well, keep an eye out on that front. Prakash is expecting a bit of an up move in terms of the markets. A quick check on a couple of stocks before we go into that break. KRBL, that's been a rank underperformer. It's seen a lot of selling in the recent past, in the last couple of months. Various reports have been doing the rounds. That stock is suddenly seeing a bit of a bounce in the low point of the day, up close to around 4% as we speak. Slip into a short break, come back, continue our focus on the markets and a whole host of stocks.